Time and price, two fundamental principles that move the market, and one great tool you can use to further your understanding of time and price is the time priced opportunity indicator, also known as the TPO. So in this lesson right here, I'm going to teach you all about the TPO, how to set it up on your chart, and how you can start using it starting today to give you some edge. So let's get straight into it. For this lesson, I'm going to be teaching you on TradingView. It's my favorite tool to use to teach you on TradingView. Now, if you don't have this indicator and it's not available for you on TradingView, it might be because you need to get the premium account on TradingView. If you don't want to do that, you can try and use it on whatever platform you're currently using, whether that be IBK, Ninja, whatever you're using, Quant Tower, they will all have a TPO or something very, very similar. So let's get into it. Now, there's two ways of loading the TPO onto your chart. The first would be to come up here where it says candles and go all the way down to time price opportunity. But what I prefer to do is load it as an indicator so I can overlay it over my actual candle structure. So you'd go to indicators, type in TPO, and you see it right here, time price opportunity, and pop that onto your chart. And it will look something like this, okay? Very bright. It's a lot to deal with, isn't it? What is going on with these charts? So much information, and it just looks messy. So I'm going to show you what I do to clean this up, how I like to use it, because there's a lot of information here that you do not need. So let's double click on this. Now, the first thing I like to do is put all my gradient colors to red. I don't want to see the gradient colors. I'm really not interested in having an absolute cluster of colors on my charts. Nice and clean, nice and simple. I like to pull this opacity down for what's outside the value area so I can clean it up. Now, normally I take value area high and value area low off, but for the sake of teaching you, I'm going to leave it on for today, and we will leave everything else as is. Let's scroll down or go to volume profile. Actually, I don't want to see this. There you can see this is the volume profile. That would be your traditional volume profile. So if you want to compare this, because they are different, you can use it. Again, I'm going to take that off, and I'm going to take point of control from the volume profile off. And okay, and that's what we have. All right, nice and clean. Now, for this and how I like to use it, always on a 30-minute chart because we are looking at 30-minute blocks. And also, I like to use regular trading hours rather than extended trading hours when using the TPO for futures. Now, if you've done my course or you join me in the live stream, you'll know I love looking at where cash players are in the market. 9:30 to 4 o'clock, those are the hours I'm interested in. Don't really care about what's going on in Asia and Europe for the futures when it comes to TPO, because that's a long period of time with not very much volume. And I'm interested in the time spent where volume's being used, and that's in the New York session. So let's dial into this so you can understand what's going on. Let's just zoom right in here so you can understand. Here we go. And you're going to be thinking, what is this? It looks like a volume profile, but it's got letters on it. And you'd be correct. What you need to understand that what is going on in these charts is that each letter represents 30 minutes in time, not each block, each letter. So here we have A, all the way down. That means during this 30 minutes time, price moved in this section of the chart. Then we go into B. So you can see B. All right. So from 9:30 to 10 o'clock, price moved here. From 10 o'clock to 10:30, price moved here. Then we would go to C, D, E, F, and so forth, all the way until the end of the chart. Okay, so what it's showing you is where price has spent time. What we have then is where price has spent the most time will be this white block. Okay, and that is your point of control, not based on volume, although it's very likely that it will match up with a volume profile point of control, but it is not based on volume, it's based on time spent. So you can see here, time has spent the most amount of time in this white block here. That's why it's extended out. The next thing we need to consider is the value, or the value area high and the value area low. So just like with a volume profile, 70% of the time is considered value, and that would be value area high and value area low. So in here, value. All right. Those are the first key components that you need to understand when you're looking at the TPO. The next thing is what's happening outside of value. All right, outside of value are basically auctions and failed auctions, aren't they? Very similar to initial balance. When we have what we call single prints. All right, single prints are where we just have single blocks. These are 2 single prints. Here you have 3 single prints, right? This is where the market has not spent a lot of time. So what does that mean? That means one of 2 things. Either that we've gone to an area and reacted off it. In this day, we've gone down to this area and clearly reacted off it to trade upside, because you can see early in the day, this is when we're down here. Early in the day, we're down here, and then we're trading above it. In fact, I can see that I've left the initial balance on this white line. Let's take that off. Well, I can already see, there we go. Take that guy off. All right, so I could already see that we traded down. So on that specific day we were looking at, your initial balance was down here. Very little time was spent in the initial balance. What was spent was an auction above. All right, so single prints are really important because they are areas where we probably lack liquidity. When we move fast away from an area is where we lack liquidity, basically a gap in the chart. So it's important to know where those single prints are, because they are normally the end of an auction, all right, or they can be somewhere that we need to revisit in the future, all right? So there are some key components and key understandings. The next thing I want to talk about is the 3 different profile looks. In case you're not someone that's ever traded volume profile, let's just zoom up here and we'll do a little bit of a lesson for you. So we have 3 types of profiles, really. We have a D-shaped profile, we have a P-shape or top-heavy profile, and we have a B-shape or bottom-heavy profile. Now, these can all mean different things, and it's really important to understand where we open and close in relationships to these profiles. But generally speaking, when we're in a D-shaped profile, we are in balance, all right? We are in balance of that profile. When we are in a P-shaped profile, this is normally you'd be taught that this is a bullish profile, as long as we are closing up here and not down here. And when we're in a B-shaped profile, this is normally when we're in a downtrend, all right, as long as we are closing, again, inside this range here, not closing up here. Now, when we're looking at P-shape and B-shape, other than continuation, we can use them to give us understanding of where potential reversals might take place. Let's make sense of that. Let's focus on the P-shape, or as some people would call it, a top-heavy profile. If we have this profile, right, and we close up here, and the next day we open above the value area high, or maybe even inside value, it's very possible that we're looking for pullbacks in to hold for a continuation higher, because this is where time has been spent. This is where value is. This is probably where point of control is. This is a good area to buy off because it's structure, isn't it? If we think about how we've probably got there, it's probably something that looks a little bit like this. All right, so that would be a good area to buy off. However, if we are closing down here on the day and we're not closing where we spent time, what does that show you? That would show me that buyers probably got stuck up here, sellers attacked them, and we are weak and closing lower. So I would be expecting a continuation lower at that point. The same would be said if we closed underneath, or even if we closed inside, but we open the next day down here, you'd be looking for a trade inside for a continuation lower, okay? Because you would know most people are stuck up there. We spent the most amount of time up there. They're stuck up there. Let's look at a B shape. Same principles. This would normally be a continuation lower. As long as we close in here and we open the next day underneath or inside, we're looking for a trade to be rejected and continuation. B shapes are normally seen as continuation trades for heavy price action going lower because we're spending time near the lows. Again, however, there are times where we can use these for reversals, because if we have a B shape and we close up here, what does that mean? It means buyers took control down here. It means sellers tried to force the way lower and we went, no, not today. We're going upside. And it means those sellers are stuck. So the next day you would be expecting anything inside which holds value to be bid back upside. Okay, hopefully that makes sense to you. Understanding where people are stuck in the market is absolutely key. I talk about this every day on stream. Key principles of trading momentum are understanding who's stuck and where they're stuck and where their pain point is. So with that being said now, let's just zoom out a little bit here. And for the sake of this, I'm actually just going to take some of these things off. Let's take value area high, value area low off, and let's take the letters off and cleaned it up a little bit like this. Nice and easy to review. All right, so let's just look, how many days should we go back? Let's look from here. Again, I'm just using regular trading hours here. So we're going to focus on this day here, all right, for the first one. So what do we have here? B shape. Right, B-shaped profile. Normally looking for continuation lower, aren't we? So if you click on these, you're going to get to see the open and close. So the close right at point of control. So good close, strong close for continuation lower. The next day, we open pretty much near the value area low from the previous day. We get a drive up just above point of control, a little dance sideways, and we have basically an inside bar. All right, so this is adding time spent in this area. So we know now if we can reject this area, we've spent a huge amount of time there. There's enough supply there that we'd expect some follow through to the downside. That would change if we opened up here. We'd be looking for a continuation high, thinking these people are stuck. But currently, we are in a B shape. We're in a sell. We're looking for that continuation down. The next day, you can see right here, we open up right here at 908. Underneath where? Underneath where we spent a lot amount of time the previous 2 days. So automatically, I'm thinking sell. This is a reason to sell this. People are stuck in the market. And you get a big kill candle, right? We leave excess here. Single print, single print, single print. And we create value down at the lows. Again, what do we have here? It's another B-shaped profile. We click on the candle so we can see where do we close this day. We close at the lows. Fantastic, strong selling continuation. So the next day coming into the market, what am I thinking about? Can we sell the market down lower? As long as we stay either beneath or in value here, I'm thinking about how can we sell the market lower. So come to this market, look where we open. We open so far down, all right? We're so far away from these areas. So at this point here, it's a little bit risky to be thinking about continuation because what we really like to do is back test, don't we? We like, if we were opening here, we'd look for this move, but we're opening so much further down that we've got very, very little to risk off. In fact, we don't get any continuation lower, right? We get single prints here and we start to turn around. We're drifting upside. So at this point, if we're going to drift upside, what do you think we're going to do? We're going to come and backtest these areas we've just talked about. And that's exactly what happens. We drift higher, right, and creating a value area high right in line with the previous value area low. And we drift even higher, test the point of control, closing in what? I would say D shape in value. We're starting to find some balance in the market. And that's a D shape, isn't it? So we've gone from a B shape to a D shape. We know starting to feel a bit of a sentiment change here because we're going to D shape. The next day, exactly the same thing. We open right at the old value area high, right? So all the time we're able to hold a value area high, we're thinking, can there be continuation against this range here? What does this do in the morning? Back tests point of control. We're looking for dip buys because remember, sentiment is shifted and we drive higher, all right? Again, another D-shaped day. I would call this a D-shaped day rather than a P-shaped. Some people call it P-shaped. I would still call this fairly D-shaped to me. And where do we close? Again, we close at value area high. All right, fantastic. The next day, we open at the old point of control. Now, this here you can see we have a bit of a flush down. Where do we go and check? Towards this POC. And we clean up what? This single print here. We try to clean up that single print, find a bid. Bit of an odd day this, but manages to find a bid and drifts all the way back upside. Holds value again, and we close high. We close high in the single print above value area high, above point of control. What does this normally mean? If we leave this single print here, where we open the next day is key, because if we're opening upside here, we'd think about a back test for the move higher, but we don't. The key thing, like we talk about, is always where we open and where we close. We have a huge gap down, all right? And we're opening up right here. Where are we opening? These excess single prints. Who's trapped now in the market? These buyers, these buyers, these buyers. They spent 3 sessions bidding it up, only to reprice this little gap here with a single print to wake up in a lot of pain. So automatically, shorts. We're thinking about how can we move to the short side at this point, because we do not want to get trapped with these people. We're looking for continuation. It is an almighty gap down. Again, really just produces a D shape, but you should automatically be thinking short against any of these areas up here. And the next day we do the same thing again. Everyone now trapped in the market, D shape again. We're just walking price down now. Notice how point of control is just moving downside with this market. And we start to find balance down here. You can see we start to trade sideways. There's a bit of thin structure this day here until we get to this right here. Now, this is our first B shape reversal. All right, because normally, like we said, a B shape, remember, normally volume at the lows, we're looking to trade lower. But what's the key here? The key thing is, where do we close? We are closing all the way up here. All right, we're closing up here outside of value area high. We close outside of value area high, leaving point of control, leaving all this trapped volume. All right, very much like this session here, where we drifted higher and we gapped down. This does it. We're drifting lower and we rip up during the session. Let's just clean this chart up a little bit for you. So then we think about what can we do into the next day here. We're gapping down after an almighty gap up. Where have we left imbalances? Where are the single prints? Here are the single prints. All right, this is where we've not spent a lot of time. You want to know what a real imbalance or fair value gap is? That's it right there. That's a true imbalance. You can see it by time, all right? We spent no time there. Here it is for you SMC traders. There's your imbalance. But here it is based on time. So we're looking to see if we can hold key levels. Ideally, you'd want to protect the single print. If sellers really wanted to take control here, they would need to come down and close these gaps, all right? And they fail to do so. We print another balanced bar, walking point of control up, walking value area low, value area high up, all the way upside, filling what? This gap. Okay, and then inside bars, 2 days in a row, right here, before we get this gap down, opening beneath value area low, automatically looking for sells, wash down, and into today's price action, which was rather choppy into OPEX, and we said it would be this way. Why would it be this way? Because if we zoom out and we understand this, really we're trading between a few key areas, aren't we? We can see that this right here is pivotal for buyers to hold on. And I'd say this right here is a pivotal area for sellers. And in between here, you are going to get rotation. What does rotation look like? A D-shape profile. Always a D-shaped profile for rotation, because we move, the very principle of it, think about this, we move from a value area low to a value area high or initial balance high, back to VWAP, back to here, back to VWAP, back down, back here. And this, in terms of time, will look like this. All right, so that makes sense, doesn't it? So using TPOs can help you understand who is in control when you are coming to the market the next day. It's so simple. You can see the gap on the chart. You can understand who's in control, where we've spent the most amount of time, the type of profile it is, and then you can make some smart decisions. So to recap, what does the TPO show us? It shows us time spent at key levels in the charts, and we can use those key levels that day and the following sessions to make smart decisions. Remember, the shape of the profile in the previous session can give you a good clue of what's coming next. You've got 3 types of profiles. D shape, where we're probably just going to trade inside balance. We're going to trade back and forth in rotation. P shape, where as long as we close high in that P, as long as we close in value or to the top side outside of value, we're looking for potential continuations as long as the next day opens there or above. If we open below the P in the P shape, or we close below the P in the P shape, it can be a good sign of reversal that we're then going to drift lower. And the opposite for a B shape. B shape should be a continuation lower as long as we close in value near the lows and we open there or beneath the next day. Again, if we open the next day higher, you're looking at reversal trades potentially. Super simple. See how easy this can clean up your charts and give you a bit of perspective. When you come to that chart in the morning, you should automatically have an idea of what type of market condition you're going to be in. If you can quickly come to the market and understand, I'm going to be in a rotation today. I need to trade edges. I need to be careful. We're in a reversal today. I'm looking for a reversal type move. Or we're in a continuation trade today. Your life's already easier. You already understand the market conditions. Hopefully this video has helped you loads. Let me know what you think underneath in the comments. I'll be back real soon to drop some education for you. Peace out.